Hello, everyone. I am Maggie Parkhurst from Global Upside. Welcome to today's virtual open house. Our panelists will begin by addressing the top HR and payroll considerations in Europe, the Middle East, and Africa, and conclude with a question and answer session. Please enter your questions via the chat window located at the bottom of your screen at any time. We will answer these in the order they are received. If we are not able to address all questions during our live session, we will respond to you individually via email. First up, I'd like to introduce our CEO, Raghu Bhargava. Raghu is an award-winning entrepreneur who has spent his career helping companies tackle accounting, payroll, HR, and compliance challenges in over 100 countries. Prior to Global Upside, he held leadership positions at several companies, including Deloitte and NetIQ. Our next contributor is Andrew Wilson. Andrew helps some of the world's leading companies tackle complex global HR and payroll challenges. Prior to Global Upside, Andrew worked at PricewaterhouseCoopers, Oracle, and also consulted for companies like Nestle, P&G, and Pepsi Cola. Also on our panel is Nathan North, Director of Global Payroll. Nathan helps our clients develop robust payroll processes, systems, policies, and programs. Prior to Global Upside, Nathan managed global payroll for leading employers, including Netflix. Now over to you, Raghu.
Thanks, Maggie. Welcome everyone to the webinar. We did one of these on the APEC region yesterday and covered China, India, and Japan, and addressed some of those complexities in those three countries, which are some of the most complex countries in the APEC region. Today, we are going to address the EMEA region and cover UK, Germany, and France, not necessarily because of them being extremely complex, but because of the uniqueness and things that are required to be known when you go into any one of these countries and how they are different from the US. If you were on the call yesterday, I'm sure you've seen this slide before, but for the benefit of the new attendees, let me walk through some of the key considerations that apply, whether you're going to APEC or EMEA or any other part of the world. Obviously, first thing you have to worry about is how can you employ people? And in a very simplistic manner, you have an option of hiring somebody as a contractor. Now, those work very well when you have a short-term assignment, say 2 to 3 months worth of project work, where this person actually is employed by many people or works for many people on a part-time basis, and brings his own tools and things like that to deliver the services that you're buying from him. And that's a good option if you have a short-term employment, like I said. The other one is when you need to hire somebody fast, but you don't have your entity set up, or it's going to take a few months, or you are just testing the waters in that particular market, then you can employ somebody under the PEO model or the employer of record EOR model. And these models work very well for a limited headcount. As your headcount starts to grow, the model can become very expensive. And at that point, you should be thinking about setting up your own subsidiary, bringing those people on your own payroll. And then as you do that, you have a full establishment in that country, including all the requirements that come in with having a company in a particular geography. As you think about hiring people under your subsidiary, you need to think about employment contracts. The most important thing to remember is that I'm not using the word offer letter, I'm saying employment contract, which means it is a two-party contract between the candidate and the employer. And remember, this is a contract because employment is not at will. Employment is by contract, and you have to define everything in that contract, including making some of these contracts bilingual depending on the country and the local requirements. Some of the things that are very, very important to define in the contract is work time regulations, termination protection. So what happens if the employee gets terminated at some point? How would the compensation for that period be computed, things like that. And it is good to define some of these up front. So when you actually, if ever have a separation, it doesn't become a contentious issue and take you to court. And most countries outside the US side with the employee versus siding with the employer. Doesn't mean that the employer doesn't have protection. It just means that think about it in advance versus at the time of separation. Obviously, breach consequences are addressed in these contracts from the perspective of what happens if there's a breach of the contract. And by defining it, it makes it easier to enforce those requirements. And these 2, 3, 4 items that I mentioned are in addition to compensation and holidays and vacation and things like that, which have statutory requirements in terms of minimum requirements or national holidays being a holiday, but it also establishes a formal process of that employee's benefits and things like that, or holiday benefits. Obviously, as you bring people on payroll, you have to worry about benefits. In most countries, there are statutory benefit requirements, most notably health benefits and some other related benefits. But in most countries, people do offer what are known as supplemental benefits or supplementary benefits, which are over and above what is required by statute. And why is this necessary? Because people will not come work for you for just the statutory benefits, because other employers, your competition, or other employers in different industries, maybe not your competition, is offering a richer benefit plan. And then depending on your country and your nature of your business, you may have what is customary in that industry. So as an example, high-tech industries offer more richer, better benefits than some other industries. So you need to know that, and you need to cater to that for your candidate pool. So now you've got your subsidiary set up, now you got your benefits, you've got somebody employed under a legally compliant contract. Well, next comes this payroll. So payroll obviously requires computation. What you need to be mindful of computation-wise is that somebody who makes $120,000 a year isn't going to get paid $10,000 a month, because there might be provisions for a 13th or 14th payroll. So you have to compute that differently, the monthly pay. Then there is the deductions for taxes, social charges. Tied into that is payroll reporting and data privacy. Data privacy in Europe is a very big deal, with the GDPR regulations going into effect as of May 25th of this year. So be very mindful of that. You can't just willy-nilly transfer the data without permission across borders. And then you have to worry about the hire to retire cycle of how do you find these people, how do you do the ongoing workforce management in terms of onboarding, in terms of employee life cycle management, putting them on benefits, taking them off benefits. If there's a life event, how do you incorporate that into your benefits, managing the benefit plans themselves. And then you need systems for your workforce visibility, your global workforce visibility, so that you know where the people are, who's taking vacation, who's doing what, all kinds of stuff that HR needs to know. With that, I'm going to turn it over to Andrew Wilson.
Thank you, Raghu. So obviously we're talking about the 3 largest markets here in Europe that are the most popular for companies to enter into. These are some of the things of note, or things that are very topical in terms of having come into effect this year, in terms of Germany, the UK, and France. In Germany, they have actually made more changes to the protections against the dismissal requirements. So they are more onerous. They are really working against the companies in terms of making sure that the employees have full entitlement in terms of severance and termination benefits. And so those protections have come into force this year, and will affect how your employment contracts, so your current employment contracts in place. New Maternity Protection Act has been expanded to all working women now, and so those protections and the statutory leaves associated with it, and also the harassment requirements have been increased, which is of note. Limitations on the work time has also been increased, so they are very much like France, moving towards a model where they're trying to regulate the number of hours in the work week. They have not got to the stage where they're actually tracking it yet, but they are requirements in place to say that you are limited in terms of the amount of hours you're allowed to work over a specific period of time. They have also introduced a new representative body to represent the severely disabled employees. So they are enhancing the protections and coming up with an independent tribunal that will work towards representing these disabled employees in the work system. And of course, works councils are very prevalent, as are collective bargaining agreements in Germany, and they are having more influence in terms of requirements for approvals for any changes as it relates to payroll systems and benefits of note. Yes, I had a question.
Yeah, and from a payroll perspective, when we're talking about payroll systems specifically, one thing to keep in mind to avoid is implementing a system without working with the work council, because that can void the system and require you to stay on whatever current system you have.
Moving on to the UK. Just as a side note, obviously Germany just exited the World Cup, so we just wanted to note that. Moving on to the UK, in terms of Brexit preparations, obviously this has effect on human resources and employment contracts and ability to work extensively in Europe, and so people are reviewing the provisions of their contracts and their ability to have the right to work in particular parts of Europe. So obviously September's the deadline, so it is going to come up, I should say next year is the deadline, so it's going to come up quickly in terms of what's going to happen. All public companies in the UK now are actually required to publish gender pay gap reports for executives, and so there is a movement towards promoting more equal pay as it relates to men and women in the country and advertising the discrepancies as it relates into public companies. As we know, in terms of the termination provisions and the severance provisions, companies with a certain number of employees in the UK, if they do go through a workforce reduction, are required to provide an employment law attorney to the terminated employee who negotiates on behalf of the employee in terms of making sure that the provisions are fair and the separation is correctly compensated. Obviously, there's the concept of garden leave here in the UK as well as in the other countries such as Germany, where people actually are actually put on an extended period of leave prior to the actual termination. And then there is changes continuing after the pension plan that was introduced about 3 years ago in the UK, relating to the new 401k style pension plans that have been put in place and are typically either through the government or through the insurance companies. And I'll let Nathan comment on that.
Yeah, so in relation to the pension plan, there is no regulation to speak of that requires an in-country bank account. However, the pension providers have unilaterally implemented this process change where they're only accepting payments from in-country bank accounts. Additionally, what you want to keep in mind from a payroll perspective in the UK is there's been significant legislation this year in regards to updating work rate rules, leave rates, and so you want, including rate changes for severance taxes into 2019. So you want to keep updated on the changes that are happening in the UK from an employee pay rate perspective.
Moving on to France, which obviously with President Macron in power is experiencing a lot of changes. France is the only country in Europe that actually requires you to track statutory work hour limits and time tracking, which includes executives as well as all employees. They have very specific limits in terms of the amount of hours people are required to work, and they do have the right to come in and audit you. So it is especially important from a time and attendance standpoint to be able to track all the hours worked by both the employees and the executives. They have increased the amount of statutory dismissal indemnity, so you are now required on every year of employment to actually pay greater severance payments to the employees as exit the company if it is for involuntary termination. So this will affect all employment contracts as you move forward. They've also extended the collective bargaining agreements enforceability, where the collective bargaining agreements terms prevail over the employment contracts, unless the company specifically elects to say that they do not want to prevail, and the employee then can refuse to accept the bargaining agreements and can insist on being terminated. So it is effect in terms of there is a governance issue on how the employee do, and there are proposals at the moment, so it is not statutory yet, but they are basically in process. And did you want to talk about statutory benefits?
Yeah, so from a statutory benefits procurement process, you want to be mindful of the time you take in selecting the statutory benefits plan. The process is very similar to how you would implement supplemental benefits. However, these are statutory and must be implemented in a timely fashion. The other additional item, similar to Germany, make sure in regards to working with your payroll system that you include the work council.
Great, thank you. Let's move on now to our first question. May an employer insist on employees obtaining medical insurance as a contingency of employment?
No, I would say absolutely not. Obviously, in the terms of employment, you can offer medical insurance, and certainly from a statutory perspective, if it's mandatory, then you basically have to contribute for it. But there's no provision for enforcing an employee to actually obtain medical insurance.
Okay. Next question. What is the rule for the Czech Republic's taxation on gifts from employers?
So the taxation rules in the Czech Republic is very similar to most of the European Union fringe benefit tax requirements that are usually due at the end of each year. It is advisable to make sure that you're keeping track of these gifts and all other items that fall under fringe benefit tax.
Okay. Thank you. I would like to understand any possible double tax implications as a UK company employing people and paying employment taxes in Greece.
I would say from the perspective of really whether they are Greek nationals or they have the right to work in Greece, and you are employing them as solely being executing employment in Greece as a jurisdiction, then obviously they're subject to the Greek taxes and Greek statutory benefits. I think from the perspective, if you're talking about foreign nationals, such as UK citizens who have who are work permitted to work in Greece, however, according to the UK tax rules, have to spend specific amounts of time outside the UK to enjoy, taxation holidays from the UK taxes. There are implications there, but usually that's an employee mandated requirement, not an employer mandated requirement.
Okay, thank you. Next question. A UK employee wants to use their own pension. How do you set it up to make it compliant with the government pension requirements?
I'll take that question, Maggie. So a UK employee can opt to use their own pension plan. However, it must be in compliance with the HMRC guidelines, and there are specific processes that must be followed while ensuring the compliance of the plan.
Okay, thank you. What are the payroll rules, particularly for London and Luxembourg?
Okay, I think in terms of that, obviously we're talking about working in the UK or working in Luxembourg, and if their work is being performed in those tax jurisdictions, then obviously the employees are subject to the payroll taxes and statutory benefit payments that are required in those countries. and that is processed and calculated through a compliant payroll system and paid accordingly. So it is very specific to the jurisdiction and the country that they are working in and residing in.
Okay, thank you. Next question. What is the competitive primary and secondary caregiver leave policy? What added benefits are companies offering?
In regards to this question, there are actually in the UK, for example, there are many types of caregiver leave, and most companies will go with the statutory plans. We have not seen quite often companies adding to the caregiver plans because in most countries this is taken care of.
Okay, thank you. How are the UK and the Netherlands taxes calculated?
Very similar to the answer in regard to Luxembourg and the UK. Both countries have their own separate tax systems for payroll, and really depends on the structure of the company, the employee settings, and the earnings.
Okay, thank you. Next question. I would like to know more about the EU GDPR compliance regulations for US companies.
Yes, the EU GDPR requirements, which I mentioned earlier, are effective May 25th, are only applicable if you have dealings with anybody who's either a EU national or is a company based in EU. So if you are a US company only doing business in US or doing business in the rest of the world, GDPR doesn't apply. But the minute you get into that situation of dealing with EU nationals, then GDPR does apply, and it does have quite an extensive amount of requirements from ability to request you to remove their data, ability to make you forget them or anonymize it or other things. Basically, you need a lot of permissions put in place before you can move the data across borders, before you can, obviously, the idea is to prevent people from selling people's personal information for marketing purposes and other purposes. And we can to the extent any one of you have more detailed questions, we can talk about it, but most companies that are doing business globally need to be GDPR compliant going forward or effective May 25th.
Great, thank you so much. Next question, do you have to pay out rollover holiday if they haven't been used by a certain time the following year?
In regards to rollover holiday, this varies from country to country, and two examples I'll give you. In France, the time does not roll over. It's actually it's mandated by the government to use all holiday time during the calendar year. And in the UK, based off the company policy, time can roll over into the first quarter of the year.
Great. Okay, I think we have time for two more questions. Can you please let me know what the process looks like for opening a permanent office space in London, UK? We are a Canadian company.
So the UK has started limiting the ability to really do anything except to incorporate a legal entity or a wholly owned subsidiary. So now there are requirements in place that if you do want to open up a permanent office and reside there and have representatives doing business for you, that you will need to incorporate, register for the income taxes, payroll taxes, statutory benefits, and set up the payroll service accordingly. Typically, that process takes approximately 30 to 45 days from start to actually being an ability to execute business there.
Okay, great. One last question here. We often provide an employment contract and a U.S. offer letter because the contract doesn't cover stock options. Do you see any problem with this?
I think that it really depends on the country, and certainly places like the UK do require you to register the stock options and to deal with the tax implications. And I think in all cases, I would recommend that you actually include all employment matters in the same employment agreement, and address how you're handling the stock options in the specific country, because they do have tax implications and they may require immediate payment of taxes as a consequence of the grant.
And remember, if you have as an example, if you have a local contract and you have a U.S. offer letter out there with the same employee, you're actually opening the door to which one is actually effective under whatever the clause the employee may invoke at the point of termination or for other reasons. So you do not want two letters, two contracts out there. You just want one, and there are ways to do that very easily.
Great. Thank you, everyone, for attending. We have several more questions in the queue, so we'll respond to those individually via email. You can also reach out to our panelists individually. Their emails are shown on your screen. We will also be hosting more virtual open house webinars, so stay tuned for those. Thank you.
Thanks, everyone.
Thank you.